Trading is not rocket science, but for some reason, everyone massively overcomplicates it, when actually the only thing you need is to know how to trade support and resistance, also known as key levels. Don't worry, I'm not here to waste your time. So in this video, I'm going to explain firstly what a key level is and the mechanics behind why they work, when they work the best compared to when they work less often, and then I will go into a full deep backtesting session where I'll show you how to apply the strategy. So without further ado, let's get into the video. So what is a key level? A key level is simply a horizontal price in the chart where large participants of the market, whether it be hedge funds, institutions, or the retail space, look to either enter or exit their positions. So in the example that I'm going to use, as we can see, the price is moving all the way to the upside before having a big rejection to the downside. And what this has done is now created our first key level or area of resistance. Now, what typically happens when we get back to this area of resistance is that the buyers who are in from this level are now cashing their positions at the resistance. So those buyers are effectively selling their positions, which is now creating a bit of downward pressure. And on top of that, the people who are now short selling the position have now added to that outweighing of the buyers to sellers. So in this scenario, there are now more sellers than buyers, and what that has done, it has created a move to the downside. And this happens best in technical driven environments. Now what I mean by technically driven is that that's when the market is looking for a driver. So that's when big money isn't being shifted from one thing to another, and you're not seeing these massively volatile moves. And that's when these areas of support and resistance do work the best. So what's happened now is we have had a push to the downside. So when we've pushed back up to it, we have now broken through it. Now this usually happens when there is a fundamental driver. So whatever that may be, whether it's a monetary policy report or a speech or some sort of politics like tariffs or whatever it may be, for whatever reason, the buyers have not exited their positions from here, and there is not enough short sellers to create that pullback. So what's happened is we have now had a break. Now, what typically happens after a break is we get a break and a retest of this level here. Now, the reason this works is because as long as the fundamental environment does not change, then we're still fundamentally bullish on this example here. So when we've come back to it, the buyers are now just adding to their positions from here. And we also have the short sellers from here now exiting their buys from here, which is now creating more buying pressure. Now, when a break and retest doesn't work, it's usually because the fundamental reasoning does not persist, as in the fundamental narrative has now changed. So in the example that if price did move up here, and now for whatever reason, the fundamental narrative has now completely changed, what would typically happen is we would see a breakdown of this level here, rather than seeing a move back up. And again, that is because the sellers from here are now not cashing their positions because the fundamental narrative has now changed to the downside. And because it's changed to the downside, there is now a lack of buyers here as well. So again, to recap, when we have a good break and retest working, it's usually when the fundamental narrative has not changed. Now, as I mentioned before, when a key level works the best is usually when either A, it's a technical environment, or B, one key level breaks in order to take the next one. So I'll give you an example here. So imagine we've pushed up here. Now, firstly, we have now made a new key level because of this high here. So this is now the new key level that we'll mark up. And now the price is moving down. Now, for whatever reason, the price breaks the key level. And that could be anything, again, to do with fundamental drivers or the macro sentiment or politics like tariffs or whatever that may be. But what that now means is that when we get to this level here, this level has now a greater odds of working. And why is that? It's because all the sellers from here, for whatever reason, they haven't exited their positions at this key level for this fundamental reasoning. So because they have now got to the next key level, what's going through their minds is that they now need to cash their positions because they're happy enough with it. But what it also means is that for whatever reason, because the buyers have not entered this position, they're now more likely to enter here because it's now been an overextended move as well. Now, another reason why key levels might work better in one scenario than another is because of overextended moves. So imagine we've moved all the way up here, and now we have broken all the way down here. Now, this means that this also has a very good chance of working. The reason being is that it's had such an overextended moves. So in this example, it's done nearly 800 pips. So what you can expect is for these sellers here to exit their positions at that key level, along with buyers to start entering as well. So even in big fundamental environments, as long as you've got a big overextended move into a key level, it's still got a decent chance of working. But also in fundamental environments, that's when, if you had a sort of level in between these two, which isn't too far away, that's when you'd leave it and just go for the next one instead. So now you understand, firstly, what a key level is, along with why it works, along with when it's more likely to work, along with when it's less likely to work. So now I'm going to jump into a backtesting session to show you how you can apply this logic. Right then, now we're going to jump into a little bit of backtesting. So I'm using the CTrader backtesting tool here. Now there are lots of other ones you can use like TradingView or FX Replay or whatever it may be. I'm just using CTrader because it's what I'm used to. Now the first thing we need to do is mark out our key levels. So the first key level I can see is this one here, along with joining it up to the top there. So what I generally tend to do is when there's two key levels very close to each other, you join them together to create one level. So as you can see here, as it turns out, it's already worked. So what that means to me is that it's now no longer valid. So I now have to draw up the next key level above it, which in my opinion, we'd be coming around this wick to that wick there. So let's draw that up. So that is our first sell area. Now we'll draw up the buys. So there is this level here, but because it's come pretty close to it and created a pullback, that's when I typically say that it's now no longer valid. Because what you're after when you get to a key level is the profit taking from it. And because it's come pretty close to it and had a push up, this is the profit taking move. So now this key level is now no longer valid. So what I'll do is I'll draw up the next one below it, which I see is that one here, because we've had that rejection there, and then when we've blown up past it, we've now haven't had the rejection, meaning that there was more buyers than sellers, and now when we come back to it, it should be a good break and retest. So we'll leave that as it is for now, and then we'll draw the next one down as well, which is that one there, as you can see, and then the next one above this I see is this level here. Again, it's a little bit weaker, but it's still a level, so I'll draw that up. And then also another thing to note is that so I'm using pound to US dollar. So one thing I will say is that the big round numbers like 132, 131, 1.3, those are also big key levels, and GU does like to respect them. So when you've got a key level which is quite close to a round number like that, you want to draw the box so that it covers it. So my key level starts there and it ends at 132 there. So I'm happy with that. So I'll just draw two levels for now and I'll see what price does. So it's moving up. So we've got nothing for now. By the way, just before we move on, so what we're in right now, so it's hard to know when you're backtesting, but I know this. I know that this area where we're in right now, this is a technically driven market. So again, this is where big money is waiting for that next fundamental driver in order to drive the price wherever it may go. So as for now, we haven't had a trade yet, and that is just the reality of trading. So where is it? So what's happened here is, this is when Trump announced his first round of tariffs and the market reacted very negatively to it. So as you can see, the US dollar is getting very weak here, and the way you adapt to all fundamental news is that instead of going for every key level like you can in a technically driven market, the way that I like to play it now is every key level that I go for now needs either a break of the previous key level or a big overextended move into it where there's likely to be profit taking. So as we can see, that now means that this level is now no longer valid because we're now in a fundamentally driven market. So what it means is that as long as this level breaks, then I will go for this level instead. And in the case that this level works, then that now means that this level is no longer of interest because I need the previous one to fail in order to go for the next one. So what I'll do is I will now set my orders. So the first one, come in here. So what you want to do with your stop loss, you want to cover the next sort of key level, and if there isn't one in sight, you want to just give it enough breathing room. So for me, because 132, the big round number, is somewhere near, I can just give it that much because as long as we clear it by 15 pips, that should be enough. And then where you want to take profit, one of two things. So what I like to do is I like to go for either the first area of struggle, meaning the next key level above or below. So in this case, it'll be this key level here, or the 23 fib level of the move up. So because this is the first area of struggle, what I'll do is I'll draw the Fibonacci up, and whichever one comes first out of the 23 and that first key level is where I will take profit. So let's just say, for example, it were to go to the 132. So where you want to draw your fib levels is the very start of the move up. So in this case, it's this level here. So what that now means is that worst case, we're now looking at a take profit of round about, let's say 45 pips, 43 pips. So we have got a slightly positive risk reward here. But again, this is only valid if this level breaks. So let's see what happens. So yeah, that level is broken, and then this level has now gone on to work. So I hope you understand why that was. So because there was a fundamental reasoning, that means that this level here has now got, the buyers are now not exiting their positions and we do not have the sellers entering it. But when we've got to the next one, those buyers who are in from here are now happy enough with their profits to take the profit. And on top of that, we've also had the short sellers entering the market. So what does that mean now? It means that we now have some more key levels. So the next ones I'll draw are firstly, I'll leave these ones in place. And the next ones I have are firstly this one here, as there's been some area of struggle. And this one here too. I'll draw it up between this wick and that wick there, so make it a bit smaller. And then above that, we do have this area here. Now, I'm not going to include this one for now because the way that this is pulling back, this could be the start of the next key level. So what I'll actually do is I'll draw this up to that wick there, and I'll cover this level with it too. So these are the next few levels that I've got. So again, because we're in a big fundamental environment, what I want is now, I want this one to break in order to go for this one here. So providing it breaks, this next key level here will be a valid buy. So I'll draw that in like so. And again, you want to just give it enough breathing room. So in this scenario, I'll go around about 40 pips. That's fine. And then again, you want either the 23 fib or the first area struggle. So I'll draw the 23 fib down to it, which is there. So that gives me round about a, let's go there. So that's a 57 pip take profit. And now what we want is we'll set the backup as well, just in case that one fails. So the backup that I have marked out is this key level here. So I'll mark that out too. And again, you only need, for this area, you probably only need about 35 pips. And again, you can aim for the next area of struggle or the 23 fib. So that'll give me around about 43 pips, which is perfect. So let's see what happens. But again, remember that this is not valid if this one works. So we'll go from there. So that first area has failed. And now we're into this second buy here. So this does have a stronger odds of working, but if it doesn't, then this next one has an even better odds of working. So, as you can see, this one I'm pretty sure ended up failing, but the backup to it ended up working. So for whatever reason, the buyers, it did, as you can see, it did have a small pullback. It did around about 25 pips, but we had a bigger take profit from that. So what it meant was it didn't catch our take profit, and now it's gone a bit lower, but it's tagged us into the next buy, and this one has now worked. So what we can do from here is we can mark up our next key levels. So the next one I see, again, because it's had that big pullback, I'd say that's a key level as well. So we'll mark that up. And we'll just go from there. So the next ones I see, because this one has worked, I now need this one to break in order to go for the next one, which I see is down here. So let's see what happens from that. Again, this one needs to break in order to go for that. So, as it's turned out, I don't know if you saw it, but this one did end up working. So what that means to me now is that this one is no longer valid. Again, you need to remember, so we're still in a fundamentally driven market. If the market had changed and we had gone into a technically driven market, then this one would have been valid. But right now it's not. Even though, as I said before, a big strong move into the level does make it valid. It's done around about 500 pips, but the issue is, from this level that we were in, it did round about 120 pips, so it's had a decent enough pullback before that level, along with it only being 2 trading days. If it had been a bit longer, then I might be more inclined to take it, but right now it wasn't valid. So what do we do next? So we will go again, so we'll let it play out for a little bit first. So this key level has worked, and now this one is on the level. So what it means to me now is that as long as this one breaks, it now means that this one is valid. So we'll go for this one here. And then we can draw it up. Again, you know what, 35 pips should be enough because it clears the key level there. And then what you want is the 23 fib of the move up, which comes in at around about there. So this one's slightly negative risk reward, but it's fine. It's not too negative, so it's all right. But as it turns out, this one ended up working anyway. So now this one is now no longer valid. So we'll get rid of that one. But what it now means is that if this one breaks, this next one is in fact valid. So let's pay it out and see what happens. And as you can see, this next one has also worked. So that now means that this one is no longer valid, and the next one I have is this sell zone here. So I'll get rid of all these boxes just because it is getting a little bit messy on the chart now. But the next sell zone I have is this one here, which is around about the 1.3 area as well, which again, good psychological level. And then stop loss for this, you can go for 35 pips, that's all right. And then the take profit you want is again either the 23 fib of this move or the first area of struggle, which is this wick here, which lines up quite well. So we'll go a little bit above it just so we don't miss it. So again, 35 for 40 pips. It's still a positive risk to reward, so let's see how it plays out. So as you can see, this first level has in fact broken, so that now means that this zone is now valid. And as you can see, this zone worked again, so that's good. So I'll get rid of these boxes because it's getting a little bit messy. But what it now means is that the next sell area I have is this zone here. So because this will now be a 500 pip move into the zone, but as long as it's over a few days and we don't have a bearish day before that, I'll be happy enough to take it. See now, in this buy scenario, because it was again 500 pips moved down, but because we had a big pullback in between and it was only 2 days since getting there, it just wasn't very good. So the next one, as long as we get there without having a real pullback before it and trending down for a few days, I'm happy enough to take that. So let's go with that one. So we can go for around about 45 pips, which I'm happy with. And first, for a take profit, I'll see what happens, because if this is the Fibonacci level, this is when the fib becomes a little bit problematic, because if it gets to that level, we now have a 100 pip move, which typically is just a little bit too much for profit taking. You need a little bit more than just profit taking confluence to actually get the 100 pips, in my opinion. So what I typically tend to do then is I'll go for a smaller Fibonacci level, but go for the 38 fib instead. So when we get nearer to it, I'll see if there is a smaller fib level. Now, as you can see, what's actually happened is we've had a small pullback just before getting to the level. So that now means that this is the first area of struggle. So that is a good place to take profit. So what you can do is you can draw the zone up to around about there. So it's around about a 1-to-1 risk reward, which is okay. You know, I don't really like to go much less than 1-to-1, but this should be okay. So we tapped into the move, and then the pullback has happened. So what's now next is this zone, because again, we're still trending massively up. As long as we get to this level and we don't pull back before that, then this is still a valid level. So I'll go just before 133 because we don't want to miss the move. And then I'll put the stop loss just above here on about 40 pips. And then I'll take profit at this first area of struggle here. So let's see what happens there. Right, as you can see, this is the reality of trading. Sometimes you do just miss the trades. So this one came very close but didn't quite tag us in. So now this one is no longer valid. So the next one now for me, as long as we don't pull back too much further, because we are still in a fundamentally driven move, is this very top one here. So I'll draw up this last zone now. Go about there. And we can go for around about 40 pips. That's plenty of room. And then take profit right now. So that is around about 90 pips away. So that's a little bit much in all honesty. So what we can do is, if we do have a pullback like this one just before it, we can aim for that. But let's see what happens when we get there. Right, so what's happened is we haven't really had a pullback before getting to the zone. So what you can do is you can actually go on the smaller time frame and go for the next move up. So I can't change time frame on T-Trader unfortunately, but as I can see, this is the next sort of move up to it. So what you can do is you can go for the smaller fib and you can aim for the 38 fib of the smaller move. So as I can see, as long as it taps into that top level there, the 38 brings me around about here. So you can aim for that for a TP, which is around about 57 pips, which is a good risk reward. So we'll let that play out now. And that's tapped into the level and it's hit the take profit. So that's all I'm going to show you today. So I started the session round about here, I think. So it's been round about 26 days. So it's 26 trading days, which is round about a month. And in that month we have had, so that was the first trade. So 1, 2, 3, 4, 5, 6 trades in a month, with 5 of them winning and 1 of them losing. So my question to you is, would you be willing to wait a whole month just for 6 trades? Because that's the reality of trading. You have to sit on your hands a hell of a lot. Now, we also didn't capitalize on a few of the wins. So this win we didn't capitalize on, along with that win too. But we also missed out on a few losses. So we missed out on this loss here. We missed out on that loss there. So it sort of balances itself out. But yeah, that is the reality of trading. It's a shame that during the technical environment, we didn't get any trades. But typically, if you have any sort of level in a technical environment, it is worth going for that key level. But if there's a fundamental driver, it's worth leaving it and going for the next one instead. Or if you have a big overextended move, then you can go for it then too. And that is the end of the video. So thank you very much for watching till the end. I hope you got a lot of value and insight from it. If you do have any questions for me, feel free to leave them in the comments below and I'll reply to as many of them as I can. Alternatively, I do have a free Discord community where I share all my trade ideas and fundamental analysis. So feel free to check that out. I hope to see you in there, but thanks again.